Good morning. Welcome to Almus Market Morning. This is Jayaram. Jitters ahead of quarterly earnings and the rising trend of yields has kept the US markets quite bearish. Possible negative impact of supply chain issues on the earnings is being priced into the shares right now. Investors are also concerned with the possibility of another default on interest payment by Evergrande. And there are reports indicating that some more infra companies in China are facing liquidity issues. Besides, no clear solutions are actually available for the ongoing energy crisis or inflation pressures, apart from the policy tightening prospect from central banks, which is negative for stocks. We have key data on US inflation tomorrow, which will further determine the course of risk assets. Dollar made broad gains on the back of rising yields and risk aversion. Dollar again, in fact, made a break above multi-year highs based on rate differentials supporting, and the targets 114.50 near term. But should the risk aversion intensify, we can see a sharp reversal in USD yen also. For Euro and GBP, rising yields in those regions support the currencies, but broad dollar strength is suppressing gains. Once the current bout of risk aversion is played out, we should see dollar fall sizably as data shows bullish position in futures exchange in the dollar is at an elevated level. Interestingly, gold is observing the selling above 70.40 despite higher yields, with possible buying from central banks supporting it. We recommend buying on dips for an eventual break above 1800, though it could take some time to play out. Dollar INR crossed the previous high of 75.32 with ease and will probably encounter resistance at the next level of 75.55. Yesterday, PS banks were seen selling intermittently, though it was not intended to reverse the trend, but to provide liquidity and ensure orderly market. The approach will continue today also, as the RBI will use their huge resources to sell in this phase. While oil may cool off a bit, the market will be focused on equity markets and also bond yields to take further direction. Bullish bias remains. Thank you.
Okay, morning. We see the markets are still struggling to shake off the worries relating to inflation or a recent development where a number of releases are still saying the stagflation can be there. So the central banks, though they are maintaining the commentary as the current inflation is transitory, the energy crisis and pandemic related supply chains are making the market participants look the other way. The 10-year yield, though, were little changed at 1.61 overnight. And we've also seen the 10-year yield for India picking some bit of steam in the past few weeks. Currently trading at 6.34. It's a bit interesting as we have recently broken above the 52-week high for the 10-year Indian benchmark yields. The China Evergrande issue, that crisis continues to show no sign of easing, as there were few bond holders or saying that they are yet to receive any sort of coupon or the interest payments which were due to them on Monday. On the crypto front, there are some bit of good developments, some bit of anxiety related developments, as we can always see. Optimism with respect to US SEC trying for approval of Bitcoin exchange traded funds. But overnight, we saw some bit of halting for the crypto with Bitcoin providing a 1% or so correction. On the Bitcoin front, again, the JP Morgan Chase CEO mentioned that there are possibilities of cryptocurrency being regulated as anxiety and stable coins and the asset class are, have been growing significantly over the period of time. An interesting thing to also watch out over the period of time is that Indian equity markets are set to overtake the UK equity markets and come into the top 5 equity markets in the terms of valuation in the near term. So good grace, good times for people ahead. All the best.